Welcome. We're tracking earnings on NDTV Profit, and we have the first of the nifty companies announcing them, TCS, where it does seem like there's a little bit of, inline set of numbers when it comes to TCS on a consolidated basis for the quarter gone by, where the net profit coming in at just slightly above 11,000 odd crores against the estimate that we were working with at around 11,500 odd crores. Now, even in terms of revenues, it does seem like the number is largely in line, sure, at around 60,000 crores on a consolidated basis. That is what we were working with. Of course, in terms of margins, there's been a sequential improvement, and that was something of a little bit of a surprise. It's not been a significant expansion as far as margins are concerned, but an expansion all the same, and that possibly could augur well as far as TCS is concerned. What are we watching out for? Well, the deal pipeline. We are keeping an eye on the kind of deals that the company has signed as far as this particular quarter is concerned. We're also looking at some sort of commentary with respect to what we can expect going forward. Do remember that the Q3 numbers were lean because it's a seasonally weak quarter. And besides that, we have also seen TCS grapple with, along with the rest of the information technology sector, grapple with weak business sentiment in general. The economy abroad, specifically with respect to the US, hasn't exactly been pitch perfect, and which is why that's had a little bit of an implication when it comes to earnings and revenues for companies like TCS. And while it has approved a special dividend of 18 rupees per share, that's more or less perhaps on expected lines as well. Nothing out of the ordinary there. But I'm looking at the margins currently is the standard around about 20%, and an expansion to the tune of nearly 75 basis points. And that perhaps was also largely on expected lines. This is because of a whole host of companies from the information technology sector are actually working on reining in attrition, and they're also trying to bring costs down in general overall, considering there has already been a substantial amount of pressure when it comes to revenue growth. We, of course, will be talking to the management tomorrow, but we also have a press conference for Tata Communications and Tata Consultancy Services, a little later on in the day at around 5:30 p.m. And that's where we will get to question the management with respect to how things are in fact panning out, not only in key markets like US, but also Europe, which has also seen its own turbulence when it comes to its business environment. That said, we're also going to be keeping an eye on the kind of deals that the company has signed, especially when it comes to several brackets, in terms of, the $100 million clients, the $500 million clients. And those are the kind of details we will be keeping an eye on as we move through the course over the next few minutes and then the next couple of hours. Of course, we'll get a lot more color even in terms of segments and what segments have in fact done well with respect to TCS. So we'll be keeping an eye on that one. Continue to track coverage as far as TCS is concerned, and we slip into a short break, but don't go anywhere. We will bring you a lot more in terms of analysis. We'll be back in just a bit. Stay tuned in.